What's up? Good morning. Hope you're all having a good morning here so far. Market is open, baby. So let's get into it. Here's what we've got on the agenda here today. Okay, at 9 o'clock Central, that's 30 minutes from now, well, 28 minutes from now, we get U.S. JOLTS job openings and U.S. factory orders. Out of there, we have some speakers going on later on in the day. You guys can see a few Fed speakers midday, one kind of in the afternoon. And that's really about it. All right, so we'll see what we get at 9 o'clock. And as far as news, that'll be pretty much it. Now, again, daily chart, bottom of your screen, nothing has changed. We're coming into today. Man, look at that dump off the open. We're coming into today with the same mindset that we've had to have for a month now. Range market, range market, range market. Make breakouts prove themselves before trading them. All right, and if we can help it, I would love to take similar trades to, I think, the first trade we had yesterday, if we can get any setups like that. Okay, so kind of reversion back into the range after an attempted press by one side or the other. I don't care. Outside of the range. Fails, you get a signal bar coming back into the range, and you fade the move. Look at this big old wick off the open, man, on that 5-minute chart. That's pretty nuts. Good morning, guys. How we doing? John, Dominic, Keith, welcome back, guys. Rufio, Pat, good morning. Tony Lanes, Lee, welcome back, brother. I saw your post in the Discord just now. Haven't had a chance to read it yet, though. Josh, Nia, C-Mac, good morning, guys. How we doing? Bruce, good morning. Good to see you all. I recognize every single person so far. Joseph, Marshall, what's up, guys? How we doing? Duck Step, good morning. Trev Pumple, Scooby-Doo, welcome back. Tech, good morning. Kevin, I'm doing well. Ready to rock, man. Peter, good to see you. So Lee the nerd here in the chat posted his daily plan in the free Discord. He says, I could be off, but I'm going to wait and see. I can see the market hit a short rally at the open and then sell off to the area I'm watching before 10 a.m. Eastern. If that happens, I'm long for the rest of the... Okay, you're looking for an always-in long position for the day. Interesting. Okay, we'll see if you get that. For me, I'm just looking for price action. But listen, a bull trend through the day, I would very much so welcome. Got to be careful, though, because we're in a range market, man. Jet, Biker Pilot, how we doing? Diesel Man, good to see you. Brandon, Whitewater Joe. TC, Joseph says, how'd you do yesterday in the afternoon? Did you sit down? I did. I came back and I sat down. So here's a recap of yesterday, since I'm sure people are curious. First trade of the day was a $9,900 winner. Second trade, which I took on stream, was a $3,800 loser. So I left stream up $6,100. I came back in the afternoon, took one more trade. It was a $4,000 winner. So I finished the day at the high water mark, $10,100. So it was a pretty good day. There wasn't a lot, but I was able to catch one in the afternoon yesterday. It's a really big wick on that opening 5-minute bar, man. You have a big push off the open, a huge, tremendous fade. Now, I know a lot of you guys are probably looking at that pre-market here. This is a better look up top left of your screen, that 5-minute chart. You're probably looking at that pre-market little ascending support. Maybe for me, again, with levels like this coming into the open, like you get a clean bullish trend into the open, it's just... You would think it would hold. It makes logical sense that you might see that respect after the bell. The problem is volume is a lot higher after the bell. Usually volatility is quite a bit higher after the bell. We'll see if that ends up being the case. And when it's all said and done, whether or not these levels hold after the bell, in my experience, tends to be pretty much 50-50. So I kind of draw a line once the market opens and treat the new information as the information that I'm interested in trading. if I can help it, I try to avoid pre-market levels. They might come into play. You guys have seen them come into play in like stop hunting trades, but usually there's gonna be an after the bell level that I'm looking at first. And then, oh, hey, by the way, there's this pre-market curl. Maybe there's a few extra stops down there. That's like a bonus, right? So Bumpo, would you mind explaining your thought process over yesterday's winning trade that you took on stream? Yeah, I mean, listen, it was pretty simple. You guys, I posted a video of the trade footage, but I suppose, you know, there wasn't, I explained on stream, but here, let's just quickly go through it. So there was a big bearish move off the open yesterday, if you guys remember. It pulled back, and then on a 5-minute chart, we got it was a bear bar, but it closed, I think it was like at or slightly above the midpoint with a big wick at the bottom. It's like, okay, maybe this is an early reversal bar, or we just get a second leg down and it continues to fade. The next 5-minute bar was a big bull bar, closing close to the high, above the previous candle's wick high, above the 20 EMA on the 5-minute. Okay, so with all that in mind, I was looking at this and I was like, okay, but we're also in a range market. Look at the daily, bottom of your screen, right? We're not seeing breakouts succeed, at least very often lately. This is a probability thing, not a certainty thing, right? We have to always think in probabilities. We don't deal in certainties here. So I'm thinking, okay, I mean, probability is the bears tried to press outside of the range. We're in a range market. We have a clean reversal bar here. The only logical thing I can do here right now is buy the rollover at the market, which is what I did. Set my stop below the curl. I risked the curl, and I had well over 100 points before we even tested the other side of the range. I took it off at 100 points for a better than 1-to-1 reward to risk. That was the thought process. Listen, a very simple price action swing. I hesitate to call it a swing because it didn't take, you know, the whole trade maybe took, I don't know, less than, I think 5 or less bars, 5-minute bars. I'd have to look at the footage. But very simple. I mean, listen, the simpler, the better within the context of the market. It's very complicated to get all the context of the market and try to really understand what's kind of going on. Like, a newer trader might not have noticed that, hey, we're clearly in a range market, so I probably shouldn't be betting on the bear breakout succeeding when we're already pressing the ATR, day-to-day ATR, right? That's like context. There's a lot of those things, right? Like, are we in a range so far on the day with really predefined, like, hey, there's a descending resistance here that maybe I shouldn't bet against. The most important word in trading is context. Okay, but when the context lines up and you have a setup, you have to hit it. And in hindsight, it looks pretty simple because it is. Chris, good morning. How we doing? Pumpa, would you count it as an A+ setup? I would call it an A setup, yeah. A+. I don't really ever call a setup A+. There's always something that you can argue against a setup. Otherwise, if a setup was truly A+, who would be on the other side of my trade, right? Probabilities, right? Anywhere from 40 to 60%. At best, it widens out to anywhere from 30 to 60% probability of success at any given moment during the day. So to call it A+, I think is kind of ignoring the probabilities, but yeah, I'd call that an A setup yesterday. Now understand, that was a reversal setup, right? Back into the range. It wasn't continuation like you guys have seen a lot of, I don't know, a few weeks ago now, because we were getting a lot of continuation setups, so we were taking a lot of continuation setups. Dominic, did you enter the same idea? Did you re-enter the same idea? I assume you mean later in the day. No, later in the day was it was a very clear bull channel, if I'm remembering correctly. And we had a pullback, but it wasn't strong. It was kind of a weak bull channel. And in weak bull channels, I'm not going to be buying the close like we did early in the day. I'm not going to be buying bull bar closes near the high of the channel because it's a weak bull trend, right? It's not a strong bull trend in which I would do that. So we saw a pullback kind of mid-afternoon yesterday, and then we saw a bull bar. It was a smaller bull bar, but it was a bull bar nonetheless, closing kind of close to its high near the bottom of the bull channel. And I bought that rollover for continuation. The trade kind of took its time, bounced around, eventually pushed up, hit me out of target for that put me back above 10,000 on the day, or I guess above 10,000 on the day for the first time, since the first trade was like 99.23 or something. All right, so you guys see here, the bulls are taking this right back into the channel here. Man, the range on that last 5-minute bar, guess, 32 points on a 5-minute bar. That's not a lot. Let's see if we can widen out this volatility a little bit. You can see we're already kind of setting this little range here intraday. Best case scenario right now, I'd love to see us break one way or the other. Honestly, I wouldn't be mad if we broke downside, because you have to remember right now, what are we pressing? Context, right? Remember, what are we pressing? Look at the daily. That flat top, 450 to 550, right? We've been talking about this for weeks. So, is today the day that we're going to break out? I'm not one to take bets without much backing. We're testing it, sure. If we break out, I'll happily trade a bull trend up through 22,000. That'd be great, because we'd finally leave this flat top in the dust. But if we end up fading downside, it'll give us a lot of trades, so I'm open to either way. Pumple, I'm not sure when you sent this, but you said something similar as yesterday's setup might be forming if that 5-minute closes at a reasonable price, right? Now, you probably sent this when this bull bar was smaller. No, because we have reclaimed almost the entire range. I'd be basically, if this closed near the high of the 5-minute bar, which closes in 15 seconds, I'd basically be buying at a test of the top of the range, which was kind of the opposite yesterday, but I'm sure you sent that when the bull bar was smaller. Zero Dark 30 says, sell all day, baby. My wife and I, we just watched that movie over the weekend. Yeah, yesterday the bull bar that I bought the rollover of on the 5-minute, it had barely cleared, and we had a stronger bear move, which was important for that setup because it really tried to push outside of the range. What is reasonable in this market, like this daily chart, it was really trying to push outside of what was reasonable, and then we got a strong bull reversal that closed. Like if we look at it in the context of this chart, it closed like basically right here. And the 20 EMA on the 5 was moved up a little bit. So it was a really nice setup yesterday for us. We had to risk a decent amount because I had to risk basically the whole curl because I had so much upside room that it made sense for me to risk the whole curl. But the risk was, I mean, it wasn't small as far as points. But when you get a setup like that, you got to put some risk on. It only makes sense. Do you guys trade dynamic risk? This is an important question. I know this is getting pretty advanced, but I refuse to, I guess, hold back what I think is right. Like the whole, you guys know I cannot stand PDT, and the reason is the principle of trying to protect everyone from themselves. So we should just put it all out there, what's important to understand as a trader, and you can figure it out later. But you should have the information. Dynamic risk, I think, long-term is important. Like, for example, should I risk the same on yesterday's A swing setup as I would on maybe today if we get one, a B scalp setup? Probably not, right? I should probably risk more on the swing and take maybe half the risk, maybe 2/3 of the risk. on, or maybe less, on the B scalp setup. Because the probability is lower, right? For example, like think of it this way. In a lot of ways, as traders, we're kind of like glorified card counters when that was more realistic to be able to do for a living. Or let's put it this way. We're glorified, maybe not glorified, we're poker players, right? And what do poker players do? They bet more when they have a better hand. So traders, we tend to bet more when we have a setup that works better for us with a higher probability of success. Here we are testing the top end of this 5 minute, well, I guess the channel on all time frames here, but just barely taking out that wick high of that previous 5 minute bar. Get a better look here. You know, believe it or not, this 21.6 test, this is really important. Not of 21.6, literally 21.6, but this region between 21.5 and 22 in general is huge. I mean, look at the bottom of your screen here. There's 21.5-ish, and there's 22. Obviously, we've had a lot of trouble in this general vicinity over the last, goodness, we go back. What was that, 3 weeks? It's time to do something about this. But I can't bet on it breaking until the market says, hey, we're probably breaking. Yeah, remember guys, in 10.5 minutes, we get US JOLTS job openings and US factory orders month over month, both hitting at the same time, 9 o'clock Central. All right, you see a 5 minute bar wick back and close pretty much at the previous bar's wick high. That's those bears stepping in. Oh, they ruined it for me. You bears. I was hoping to see it close like pretty much here. And then I would have sold the rollover for try to sweep this little low here. I mean, we're clearly in a range, right? And until we break, you got to stay as dumb as you can. But this big wick is going to ruin that idea for me. That's okay. We're never further than 1 bar out from a setup on the 5 minute. On the 2 minute chart, we're never more than like 2 bars out. So at a maximum, really, even when the market looks ugly, we're maybe 5 minutes out, 4 or 5 minutes out from taking a trade at all times. So you gotta show up, you gotta pay attention. Okay, Pumple is asking the important questions here. This is important. Considering we're in a ranging market context, would you still take continuation trades when price is near the high or low of day, aiming for opposing sides stops? Yeah, Pumple, it would depend very much on the size of the signal move or the signal bar. Now, if you're talking traditional continuation, 2 or 3 bull or bear bars closing near the high or low respectively, the answer is probably no, unless the context is right, meaning the context being right would have to mean it sets up in a way where, for example, let's look at this. Let's say we press up here and we reject. and we get 3 bear bars, 1 small closing near its low, 1 medium closing near its low, and 1 larger closing near its low, and we get a close in like this region. Well, I could pretty much get 40, 45, 50 points, and then maybe even set a take profit at 55 or 60 points in the money without too much of an unreasonable expectation that we go much lower here. So we can take out the stops, and then after we take out the stops, we're in a range market. Unless the market proves, hey, we're trending, this is a bear trend now, you have to assume that each breakout attempt is going to reverse. Now, again, assume it within reason, right? We deal in probabilities, not certainties. But dealing with that within reason is not, okay, continuation setup gives you an entry here. Oh, look, I can take out some stops, but now I have to take profit down 40 points lower. We're in a range market. How can you expect the market to do that? The bulls are going to step in and say, every breakout previously has failed. Why would this one be different? So the context of the market is really, really important. The same way that it would be a really bad idea in a huge bull trend market to be shorting ascending resistance levels. It'd be a really bad idea. Or even worse of an idea would be taking bear continuation setups in a huge bull trend market. Because then you're selling even lower in a bull trend market, which is a horrible idea, at least contextually speaking. Okay, 5.5 minutes out from the news headlines, or the number releases, I should say. Again, that's jolts and factory orders. Well, the bulls are going to keep trying here. There's the rollover of the 5-minute. Again, they're getting stuck at the top end of this range. That was set off the open. I mean, I know a lot of you guys are into the 15-minute opening range. That's basically this. What is it, 510? It's 85 points. It's not tremendous, but these bars, you know, volatility isn't a huge problem. Yeah, Pumple, you're correct. It's been some less continuation as this flat top has become more and more brutal. The ranges have tightened down a little bit. Volatility's been a little bit lower on average. And it's been tougher to find continuation, but that's fine. So you just don't trade continuation. I mean, like, that's, again, if we're talking top level ideas as far as trading, that I think a lot of people would hold off on even like bringing up because they're like, I don't want to lose them. I don't want people to think that this is too hard. I need to keep them like hooked. Just tell you everything. Top level. Context of the market. You're not going to trade well if you don't understand the context. If you try to develop one setup that you can trade every morning at 8:35 a.m. and make a living in 7 minutes a day, it's not going to work because context in the market changes constantly. You have to keep your finger on the pulse. Okay, dynamic risk is very helpful depending on the trade, depending on the grade of your setup. Those are more top-level ideas that they sound intimidating. They're not. They're not that big of a deal. Just understand that they're going to come into play, and what you've been told, because it's what does well, Take this one setup, 8:32 a.m., make a living in 9 minutes a day. I mean, geez, come on, guys. This is the greatest playing field on earth. If it were that simple, the other side of the trade would have stopped taking it 25 years ago. Because every time they would take it, they would lose money. And then the setup stops even coming anyway, if it was ever real to begin with. All right, bulls are trying to break this out right ahead of JOLTS. We got a minute and 47 seconds until we get JOLTS job openings and factory orders month over month. It's going to move some things, so I'm sitting flat heading into that. Let's see if it can shake this market up a little bit. It sounded like you were directly roasting orb. No, I mean, listen, it's a tale as old as time. It doesn't matter what setup it is, this has been recycled a billion times. You're always going to have multiple setups, you're always going to have multiple contexts of each setup, you're going to have different market environments. It's just, this is chess, this isn't checkers. But checkers sounds better. I don't think that's the way to play this. All right, 30 seconds out here. Again, I am flat because we're probably going to see some volatility. This is no FOMC, this is no CPI, but it moves things. So let's see how much it's going to move things. All right, there you go. It's moving. Bulls try to break it out. Bears smack it down. These range markets are always like whack-a-mole. All right, we'll let this news volatility clear up a little. Shouldn't take any more than one 5-minute bar and we should be good to go. There's all the news came in, by the way. You can see top left, you can see the actual compared to the forecast for both JOLTS and factory orders. So JOLTS came in at 7.391 million. Forecast was 7.1. Factory orders minus 3.7%. Forecast was minus 3.2%. All right, so now these grindy little moves, upside, downside, whatever, in the current market environment, unless today happens to be, oh, today's going to be the day we see a trend. That's great. So if we end up taking a trade, we'll be wrong and then we'll enter a trend and probably make a bunch anyway. Trends are so nice. Trends can be such great days to trade. We haven't seen actual I mean, I hate to say it, but I don't think we've seen like a real trend market since I started streaming a couple of months ago. They're rare, but they come. With these relatively tight moves upside, like you can see the 2-minute shows it really well. This is a relatively tight move upside, right? In range markets like this, you tend to see a reversal. It's just a matter of when, which is why I don't like to short tops of big bull bars, because you're kind of going directly against the current momentum, which I learned a lot of times and a long time ago is not a good idea. It can always, you think it's like, nah, there's no way it's going further, and then it's a 7% green day. Yeah, Joseph, I would really need to see more proof here, because we're in a brutal range market. That's just the reality. The context of the market right now is it is a brutal range market, so I'm less attracted to continuation setups right now, just contextually. Yeah, see, Chris, 50 points on the day so far. I gotta say, since the other day when you mentioned long-term goal of taking a day's worth of points, I've been tracking them much more closely instead of just P&L. The problem with tracking things in terms of P&L is it's not really scalable, because you always get stuck at your mental ceiling. Because, I mean, listen, internally, guys, I know that all of us have that number in our head, which is where, like, the entirety of everything here comes from. Where it's like, okay, early on you're like, there's no way I can make $1,000 in one day. There's no way. And then it's like, 5,000 in one day? That's not even possible. And then you're like, 10,000 in one day? That's like the ceiling. We can't do that. That's not even possible. And there's always that lag, because you have to desensitize yourself and get that mental ceiling higher. But if you just start by thinking about it in terms of a real goal, which, by the way, serves an actual purpose, thinking about it in terms of points on as far as the range on the day is concerned. So for context of what the hell I'm talking about, the other day I was talking about, as far as a goal for a trader, a really good swing trader or scalper should be able to average about a quarter of the day's points range in points profit per day. So you catch 25% of what the day's range was in points. It doesn't have to be on one move, but like back and forth, you catch at least 25% of the day's total range. Long term, if you want to be like one of the best in the world, a really good goal, I think, would be to catch the full day's range, not on one move. That's ridiculous. That's never going to happen. But at the end of the day, you look, how many points did I make today? And you made pretty much the day's range in points relatively consistently. That's insane performance. But we should all set our goal there. Now, why do I prefer that over dollar amount? 2 reasons. First of all, it's much more scalable, because you're not really dealing with the mental block that we all have. Whether it's 1,000 in a day or 1 million in a day, you're always going to have that block that slows you down. And we don't need that. We don't want to be slowed down. This is hard enough as it is. We need as much time to scale as possible. And secondly, dollar amount P&L goals are completely meaningless. Because if you're like, okay, I have a goal, I want to make $5,000 in one day, but you risked $25,000 to get it on a setup that the math didn't make sense on. Let's say you had a 50% chance of success and a 1 to 4 or 1 to 5 reward to risk ratio. Did that really make sense even if it worked out for you? No. The numbers don't add up. So the dollar amount goals are meaningless and it just leads you to bad habits. Focus on points. You can scale without emotion and it keeps you true to yourself. It keeps you true to the goal. Yeah, you guys know it. Here's what I'm looking at. All right, we got 2 minutes. I need the bears to slow down. Slow down. Oh, come on, slow down. Ah, shit. They're pulling back too hard. This would be a beauty of a setup if the bar had stayed a little calmer and closed like here. I'd sell that rollover every single time. Risk the curl, look to take out maybe these lows or take a right ahead of that takeout. Maybe 10 points deeper. Try to take out some stops. Mario, good morning. What's up, So Ono? Good morning. How you doing? Yeah, okay, so... Probability on this trade just decreased compared to if that bottom wick didn't exist. If this bear bar existed as it is and it stopped with pretty much no or very little wick, it'd be a beautiful... I mean, we closed just below this. The body is fantastic. This big giant wick, what does it say? Bears tried to take it lower. Bulls aggressively shot it back up. Aggressively. That's a different story than if this wick wasn't here. Even the body being the same size. The way that I think about this really is the closer the bar, let's talk bear bars, because otherwise it's opposite. The closer a bear bar is to closing near its low in the context of the day, as long as it makes sense, the more bearish bias I would say the bar has. When it closes at its midpoint like this, even the body being nice looking, the probability decreases because you know the bulls are right here. And they just put up a big fight. Now you're going at them a second time. Like if I sell this rollover, I'm saying, okay, we're going at those strong bulls again. Whereas previously, you wouldn't even know if bulls are down here. That's okay. Just wait for it to come. Wait for the setup to come and hit it. No, Joseph, in that scenario, Joseph is asking, would my exit have been the 20 EMA in that scenario? No, I would have had my exit probably a lot closer to down here, just because I would expect the trade to take a little longer, so the 20 becomes a little bit less relevant than it would in a scalp. Where in a scalp, we'd probably be a little closer to the 20. Little hang-ups on the 20 are much more important on a scalp, or much worse for the scalp. With more of like a swinging mentality, I hesitate to use swing because these trades don't take 3 hours usually. But with a little bit longer trade duration mentality, I worry less about little indicators that I don't believe mean all that much anyway. They're just watched, so they can hesitate things a little bit here and there, but big picture, they just don't matter enough. I gotta tell you, I think we're entering a little trading range. I wouldn't be surprised at all if we went sideways here. I mean, you get that big bear bar. What I would like to do is buy a strong close on this bar, risk the little curl, risk this, and look to get maybe 1.25 to 1 upside. But in that case, we'd be pressing the top end of that channel, and I think that we're entering a trading range. You get this tight little push. Lately, what we've been seeing a lot is those tight pushes turn into trading ranges sideways this time of day for a period of time. So until that's not the case, I as much as I'd like to take it, I know that I shouldn't. Bruce, stuck to the plan. What'd you get there? You got, what, 56 points? Nice work. Yeah, those bigger point trades, those can be, I think those are like some of the best training. Because, you know, taking winning scalps, finding the edge is tough. But when you're in a scalp and it's a winner, taking the profit off, it's easy because you don't need that much. It's quick. It's a quick hit to the brain. But really good training is those swings that are 40, 50 plus points. Like yesterday, the first trade we had was a 100-point winner. If you can hold trades like that when the market calls for it, it really, really helps. And it's tough because when you're 30 points in the money, 25 points in the money, 75 points in the money, it's really tempting to just pull it. Because I get it, the deeper you're in the money and it turns around and stops you, the more it hurts. I get it, it's human nature. Does it turn into a trading range like we think? I think it does. I think it does. I think we go sideways for a little bit. And I hope I'm wrong. Yeah, ATR on the 5 minute is currently sitting at 35. That's kind of tight for the 5 minute. I'm not gonna lie. It's a little bit tight for the 5 minute, but we can make it work. Yeah, Joseph, you know what? I think a lot of people look at indicators kind of backwards. The market doesn't have to do anything based on an indicator. The indicator just does stuff based on what the market is doing. And in hindsight, it looks like the market is sucking back to the indicator. That doesn't change the fact that some indicators are popular enough that a self-fulfilling prophecy aspect is there, like the blue line, the single blue line on my chart, which is a 20 exponential moving average on the 5 minute chart. Very heavily watched. People tend to make decisions around it on the first few tests of a sequence, especially. I don't know what happened. I mean, this was already a thing before I even was able to trade. So I'd be very curious to talk to someone who's been around for, I guess, since internet trading became a thing. Like, people went upstairs, so to speak, off the floor. I don't know what happened. Why did the indicators become, like, price action is king? We all know that. The actual data is king. So why does everyone care more about the indicator? Or at least a lot of people. I don't know. Maybe this was set back in the 90s or something. It just never changed. Or the reality is trading is really hard, so the magic bullet, so to speak, is attractive. Yeah, I like volume weighted average price. I like some EMAs. That's about it. I mean, do you notice a trend, by the way? It's oh goodness. It's only the ones that people watch, that people care about, that are big enough, popular enough to offer some kind of self-fulfilling prophecy. That's it. So in a little trading range here. I mean, I hope this thing breaks out. I don't care which direction, just break out and give us something to work with. But a little sideways action here for a little bit wouldn't surprise me. We've seen that a lot lately. Peter says, my biggest issue is looking at charts for hours on end just to face a loss once my setup comes up. So disappointing and nerve-breaking. It's heartbreaking, really. You know, this is a problem that everyone has, by the way. The best insight I can possibly give to this issue, where it's like, I just sat here for 3 hours, took one trade, and it was a loser. What am I doing with my life? This all goes back to the sole thing that I always talk about. You need to just track your data. And when you have your data, you can run a calculation called expected value. I made a video all about how to do that. And when you have some data, you can run and say, okay, here's my average win rate. Here's my average reward to risk. Here's how many trades I take, blah, 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 all this, depending on what you're calculating. And you can say, okay, boom, every single trade that I take has such and such % statistical edge, which means every single trade I take, now follow me here, every trade I take, regardless of outcome, is worth X amount of dollars to me. You might say, well, how's that possible? You lose money. If it's a loser, it wasn't worth anything. It was negative. You lost. Wrong, because you have edge. The casino looks at every single hand of blackjack that they deal you as a win. And they know exactly how much they stand to make on every hand on average. It's positive on losing hands, and it's positive on winning hands for the casino, right? If the casino wins, meaning the player lost. Not as much as they won, but that's what keeps it positive when they're red, because they have positive expected value. They have an edge over you as the player. Have you ever seen a casino? I mean, maybe if a whale comes in and the owner takes some crazy bet. But have you really ever seen casinos within reason shut down and they come out on the floor and they go, hey, we're going to stop dealing cards today. We don't want to lose any more money. We're done for the day. It's too emotional. Of course not. They keep dealing you. They want you to stay there. Have you ever seen Owning Mahoney? Great movie, by the way. Probably one of my wife and I's favorite movies ever. Beautiful movie. I love that movie. He's up huge. I think he's the owner. What does the owner do? Maybe he's a floor manager or some high-level guy. He stands there until about 6 in the morning and watches him give it all back. And he says, don't send him the ribs. Don't send him anything. I want him to keep playing. That's what we're doing. Trading range, sideways. Come on, man. We're seeing below 30 ranges on the 5-minute bars. The movie is Owning Mahoney. If you have never seen that movie, it is a great movie. And we're all traders here, so I'm watching the entire movie thinking about it in terms of like trading, like how statistics work for trading. Watch that movie as a trader and you will very much so appreciate it for what it is. It's a great movie. It's called Owning Mahoney. Well, what did we just talk about 20 minutes ago? Probably going to go sideways here for a little bit, and here we are. The 2-minute chart actually shows this really well. You can see it's I mean, clearly, I would call this sideways action. You could argue that we're in a little bit of a wedge, flat top, ascending support. You wouldn't be wrong, by the way. That's a reasonable assessment. But let's just see something break here. Yeah, Chris says, any interest in this ascending support? Yes, if we got... Okay, we're not in a strong bull trend right now, obviously, right? I mean, look at the flat top. What are we in? Well, we're in a rising, well, you could argue a slightly bullish wedge because, you know, the 2-minute chart again shows it quite a bit better. Flat top, pretty aggressive us setting support. So think about this with me. Should I be buying closes of bull bars that close near the high? Like if we had a bull bar right now that shot up and closed right here, unless I was stop hunting this for some reason, which assume I'm not, should I buy that? Well, probably not, because we're not in a strong bull trend. That might make sense in a really strong bull trend, but in kind of weaker rising wedges or bull trends, I prefer to buy signal bars after pullbacks. So I am watching that now that we've had plenty of touch points here. If we got a pullback and then another signal bar, I would be interested. It's just the problem is it's getting tighter. You're getting closer and closer to kind of the peak of the wedge, which kind of starts to ruin things a little bit. Yeah, see, John, you know, all talking to everybody now, all ChatGPT is doing when you ask it stuff like this is it's just running the data. It's just saying, okay, probability, statistic-wise, what's the answer? It's just doing a math equation because you're giving it all the information it needs. It doesn't need to know anything about the Nasdaq. But play around with it. You know, when you start asking me questions like this, I've done lots of things with trading to see how knowledgeable is it about the actual movement of the market. And it's not bad. But ask it math questions. You can also ask it about expected value with your own data. You don't even have to do it yourself anymore. It should be very comforting psychologically for you. All right, so you can see we're getting this little pullback now. My one interest in this would be if we get... The problem is we're getting a pullback here. If we got a signal bar after an ascending support level retest, if we got a signal bar back upside, I would like to buy it. The problem right now is that would likely have to be on the 2-minute, which is definitely a little bit sloppier and also shows a lot more of that flat top. Obviously, it's all the same. It just visualizes it differently. But here on the 5-minute, you see all the bars. I mean, we're flat, dead sideways. Last 4 bars. And each bar is testing the top and bottom on 1 bar, which we've talked about a lot. I'm not big on. ATR here on the 5-minute chart is at 34, which is tight. This is gonna break, okay? But we have a flat top. You could argue a flat bottom, little ascending wedge still, but now getting closer to a flat bottom, flat top, 50-50, break one way or the other. If we break downside, I'd probably prefer that just because it gives us a lot more room. But you have to understand, I think a big reason, I don't mean to say you have to understand because this is all really subjective, right? That's part of why we like trading so much. We have this flat top here. I mean, very obviously. So I think the market is struggling with that, with the idea of breaking that. It's been like 3 weeks. Why do it today, right? But we're going to have to eventually. All right, so we're currently in this little range that we talked about. This was just so probable that we were heading into a range. But this is good. Okay, this is good. We're trying to break out that little flat bottom. Let's see now. Here, look up top. You got top left 5 minute, top right 2 minute. Bottom is just a daily chart. We're going to test the 20 EMA on the 5 minute, top left. Blue line, psychologically relevant, not the end of the world. If we see a nice bear bar closing well beneath that, that would also put us outside of really any argument for an us setting support, and I would be able to short the rollover of that bar. We might also hold it, of course, right? And if we hold it, then we wait for the next rollover, and then if we get a bull bar closing near its high above this wick, assuming this one were to close like here, right? Then I would buy that, risk that curl, and look to see what happens again around this flat top. So we're finally being presented here with multiple trade ideas. I like to think these all through as early as I can. 1 second here. Oh, this market, man. Back in the range. I was kind of hoping I'd come back in here and see this thing breaking downside. I could put a trade on, pop back on. We're instantly in a trade, and here we are back in the range. That's all right. Wait for it to come. Well, the entire day's range here so far. What are we looking at? About 510. Goodness. Less than 130 points. That's kind of crazy. It's been weeks, since maybe months. You know, maybe aside from this little move here, since we've seen like reasonable larger move days. No, that's all right. That's part of the game. If you can work through these days, make some money through these days, as long as you're not doing something silly, like betting against the trend when the trend market comes, you should be set. Well, we are sideways, baby. ATR on the 5 minutes down at about 33 now. That's low on a 5 minute chart. That is pretty low. I'm actually curious, what is it on the 2? Let's take a look. Two-minute chart, ATR is about 18, though the more recent ranges have been about anywhere from 9 to 13. It could be worse. I'm not gonna lie, it could be worse, but that's pretty tight. I mean, you look at the 2-minute chart up here, we're clearly just in a sideways range. This thing just needs to break one way or the other, and you're dealing with essentially a flat top. You could argue a flat bottom. Maybe you still have that little ascending support that widened out and kind of changed shape now. But it's relatively tight, and it's waiting to break. We're getting closer and closer to the little peak of that wedge. These always break. When they do, we usually get a setup or two. Pumple says, have you had any no-trade days recently? Yeah. Probably more than average. Though not like a lot. It hasn't been... I don't remember, man. It's probably like one in the last few weeks. I forget which day. I like to think that I have a very good memory, but as far as with trading, no. You asked me what happened last week today, I probably couldn't even tell you. But that's a good thing. I think that's a really good thing. You have to have, if you're stuck on a losing trade you took 3 weeks ago, that's not going to help you in any way whatsoever. I think I'm too focused on the context of the market and trying to make good decisions to remember what I actually end up doing. All right, here we go. Testing the top end of that little flat top. Got 2 minutes and 10 seconds left on this 5-minute bar. Let's see if the bulls can do something. Callie says, hey Nico, are the AI algos getting so good that it is really going to be difficult to trade in the future? Have you seen this type of price action in the past? This has been a narrative since well before I was around. Again, when people came off the floor and they first went, quote unquote, upstairs. See, a lot of people don't know this story. I obviously was not around when this happened, but there were a lot of floor traders who were very angry when this happened, because it essentially, in hindsight, ended their careers because they couldn't adapt. They were floor traders, and they could not adapt to the computer. And to this day, they hate technology because it stole a well-paying position from them in their eyes. In my eyes, they just failed to adapt. But no, I don't think this is going to be a problem, because what the AI algos are going to do is just make moves that already occur probably more dramatic. It's not going to turn into a Wick Doji chop fest back and forth, because algorithms are programmed to try to make money off of things that are off of patterns that already carry out, off of how humans and other algorithms make decisions. And all algorithms, including AI, are programmed, or I guess learn, to do things that humans do at the very top of that pyramid. Or I guess at the base of that pyramid, everything's built off of. Because algorithms are built off of rational human decision making. So they make more decisions that people would already be making. They just do it faster. And the AI algorithms, what's their goal? To make money. So they're gonna probably just feed into what's already going on, just at a more maybe volatile, make the market a more volatile place, and make the moves maybe that much more definitive. That would be my argument. I do not think that any algorithms are going to make this a place where retail traders can no longer compete. Maybe this is the unpopular opinion, but it might make it a place where our job gets even a little bit more straightforward, because it feeds into the patterns and makes them even more volatile, even more obvious. It breaks out little sideways action like this, maybe even quicker. I really don't see this as a bad thing, and I could be wrong. Talk to me in 25 years. I don't think I'm wrong. This has been a narrative for a long time, and it hasn't happened yet. Yeah, Chris, exactly. He says, could they make the self-fulfilling nature of the market a little more identifiable? I would argue yes. More market participants, in my eyes, whether they're robots or people, is never a bad thing. All right, here we are, getting a little bit of a breakout. We got 2 minutes and 20 seconds left on this 5-minute bar. The 2-minute chart also doesn't look too bad. But to be fair, if we're looking at like the 5-minute here, we're coming just out of a sideways range. So I'm not thrilled about the idea of buying a rollover high, because it's not a strong bull trend. If we were in a strong bull trend, I'd be thrilled. But let's just see how this closes. Because in a lot of ways, we could argue that this is just going to turn into a little bull channel, in which case I'd prefer to buy signal bars after pullbacks. Minute 30, see how this closes. Okay, not bad. Okay, rollover. It's not bad. It's not great. Remember, we're in a range market. We're trying to press outside of the range. Naturally, there's going to be... I'll say there's going to be added selling pressure. That doesn't mean it's going to necessarily go down. If you have more buying pressure for whatever reason, because the bulls are seeing this as a breakout, it can still go up. But if we take like the average of all the selling pressure here, you're going to have more bears stepping in as we test what a lot of them are going to see is this. Little ascending resistance. But listen, the further the bulls can take this higher, the more I'm willing to bet on continuation, which feels backwards, okay? But we're in a range market, so I'm not going to bet on... I'm not going to give the bulls the benefit of the doubt before they've given me any proof that they can do what they think they can. So I imagine we'll probably see a pullback here, and then I'd like to take a signal bar or sideways up out of the low of this little ascending channel. Again, the stronger a bull channel, this goes the same, just vice versa for a bear channel. The stronger a bull channel, the more happy I am to just buy the close of bull bars closing near its high. But we're in a bull trend today. Not to be mistaken with a trend day. It's a range market, or trend market, I should say. It's a range market. Okay, but currently, intraday, right now, we're in a zoomed-in bull trend, but it's not a strong one. There's a lot of red bars mixed in. There's some flat movement mixed in. We just came out of a flat channel that we were in for damn near an hour. So, you know, am I, like, super excited to buy highs of bull bars? No. I prefer to buy signal bars after little pullbacks. He slow melts up. They look easy to trade in hindsight, but they require me to be pretty specific and picky. Now, again, this goes back to what I was saying before. Like, you can't just necessarily take one setup and be like, I'm going to make my living off of this one setup. I'll just look for these 2 or 3 bars every day, and I'll trade this every day, regardless of context. It might work for 2 weeks, and then it'll stop working, and you'll lose more than you made because it doesn't work for 6 weeks. But if you looked at the context, you would have been able to make an adjustment so that it would work. So a lot of people would look at this and say, yeah, but Nico, you should take that. It's a continuation setup. Okay, but look at the daily. Is this a continuation market? No. You look at the 5-minute up top. Is there a pretty damn good argument for an ascending resistance there that the bears might step in and step ahead of that? Yeah, there is. So it's just a tall order. But I gotta tell you, the further we get up, the more we can kind of leave that flat top in the dust. But it's definitely more of a range. I mean, we got close to 22,000 a few trading days back. Within a couple hundred points at least. And we rejected hard. Alright, so here comes the rollover of this 5-minute. beautiful setup, but context, the probability just isn't good enough for me to take that. I mean, realistically, I'd be having to risk at a bare minimum. Bare minimum, I'd be risking, since volatility's low, I'd be risking probably 25 to 30 points, looking for probably at least 30 more upside points. So you're getting up toward 21.7. And that's up through, that would require the bulls to push us through this idea of an ascending resistance. Which, listen, hey, I hope they can. That'd be great. That'd be great, because then I'd be more and more willing to trade the trend at highs. Right now, all I'm interested in trading is this trend. But this is just a little high for me. And that's okay. Well, I mean, the Bulls are trying to take this higher, but they've gotten about 10 points since the rollover of the last bar, maybe a little less. All right, well, slow and steady, the Bulls are able to do a little bit of something here. Up 13 points since the previous bar's rollover. ATR on the 5-minute chart, by the way, is now below 30, so volatility is very low. I would definitely classify this as a melt up. All right, this 5-minute bar will roll over in 30 seconds. You can see the bears are wicking it back. That was exactly my worry on the rollover of the previous bar. See that shrinking bull body? Wick downside, bigger wick than really we've seen, comparatively speaking, to the size of the body. Bears are trying to step in. Yeah, I mean, at best, they got maybe 14 points in the money. After this rollover, I'd have been looking for at least 40, which maybe that'll still work out, but I couldn't put that on at the moment. Now, listen, by the way, it's impossible to really know until you read bar by bar when this is coming. But it's a relatively high probability that at some point this tight move upside, I mean, look at the 5-minute top left. See how tight that move upside is? Kind of looks like the move up that we got shortly after the open. It's a quite reasonably high probability that this goes sideways again at some point and turns into another trading range. This is what I mean when I say context is so important, because it's just so tough to take the buy high, sell higher mentality when we're in a range market, because you get this kind of shit. It's just, you get a small, tight, little slow leg up, and then eventually you get a bear bar and it turns into a trading range and it does it all over again. So right now I'm just waiting for a better entry. Because pretty much everything we've had so far, as you know, in hindsight, some of these entries look good, but there was kind of a problem with every one of them at the time. I mean, you guys have been here. We've been looking at every single bar. All right, less than 2 minutes before this 5-minute bar closes and rolls over. If we get a signal bar, if we get a big signal bar, I would not be interested. But this this is one of those scenarios, man, where I'm looking at this and I'm thinking, if this bar closed right about here, we could get a really, really good reward to risk trade. Probability would not be great. That's just the reality. Probability on this would not be great. But if we can get a nice close, I could look to sell the rollover, risk the curl, which is 20 points. And if we get a pullback to the ascending support, it's at least a 2R trade. But again, probability is not great. We're going counter trend, though I know that this is not a super strong a bull trend. It's kind of a weak, mushy bull trend. I'm interested. Let's see how this 5-minute bar closes. Yeah, risk would probably be about 25 or 30 points, which is just fine. Ugly, ugly close. You guys see that big wick? Look at this. Wicks back up, closes basically at the open of the previous bar. If this had closed here, I'd sell. I would have sold this rollover. Maybe just at market or using a limit. But since we're not in a big trend market, I probably would have sold it using a limit on the offer. Ugly wick back upside though. The melt up continues. Or more likely we enter another trading range. Well, ATR on the 5-minute chart is now down to 28. So it's small. I mean, even these 2-minute bars, we're seeing 10. $10 to 15 points. Man, that last 2-minute bar had about a 7 or 8 point range. Let's see if these bears can keep this little pullback going. The risk would just be so tight on that trade. All right, we've got a minute 30 seconds out until this 5-minute bar closes. The 2-minute is just not really giving us much, so I'm paying close attention to the 5. This would be a fine trade. Again, not the best probability in the world, but a pretty good reward to risk. Okay reward to risk. It wouldn't be huge, but I'm not big on huge reward to risk. If I can help it, probability just goes way downhill at that point. All right, 40 seconds out here. I would need to see this bear bar close within reason below this previous bear bar's wick. Not here, okay, but within reason. And I'd short it and risk the curl. Look for a retest at the bottom end of this channel. Bulls, you are killing us here today. Everyone's killing us here today. There is just nothing happening. Look at this. A 5-minute chart. Look at this. A 3-point body on a 5-minute chart. I keep looking over thinking I accidentally switched to like the 2-minute or something, or the 1-minute. This is kind of nuts. This is going to break out. We're just in another trading range. Same thing that happened here. Tight leg up, trading range. Tight leg up, trading range. Yeah, look at that 2-minute up top right. That shows it, huh? Look at that range. Five-minute ATR, by the way, is at 26. Range on the last few bars has been well below the average. 14.25 on the last bar. 25. 14, 15. It's all right. We can still... I still anticipate we're going to catch something. It's just slow to develop. Here we go. Bulls testing the current flat top. Up in the mid to high 70s ish is that flat top currently. See if the bulls can at least break us out of this little short-lived trading range before the close of this bar. I mean, if they could. If they could, that'd be a reasonable entry spot for me. Reasonable signal bar to get long. But understanding that we are still kind of in the higher end of the overall overarching range. And there's the rollover. Can't do it. Bulls can't do it. Oh, still sitting flat for now. All right, there's the breakup out of the range. Not bad, bulls. It's good to see. Well, the bulls are really making... I mean, in the current market environment, I would call this a pretty decent attempt at finally breaking that flat top. Yeah, obviously the bears are going to step in, which is why it's kind of tough to get long in a situation like this. Not in general, but just to find a spot to do it. A spot that makes mathematical sense. It's kind of hard. This isn't bad. Once you get a breakout of a flat, and then a bull bar closing near the high, you could make the argument that you're potentially early in the next leg, and I'd be cool with that. Plus, the risk is about as tight as you're going to get. I'm not a big fan of really tight risk, but you have to risk what makes sense. And in this volatility, we can pretty much afford to risk whatever makes sense. Because it's tight. We're not moving that much. All right, 2 minutes, 48 seconds left on this 5-minute bar. 2-minute chart's a little bit wicky. That's to be expected, though, in this volatility. You can see, though, I mean, pretty instantly, right? The bulls try to break it out, and the bears step in and wick it right back down to that previous wick. This here. They say, I don't know about that. Yeah, I mean, the ATR on the 5-minute is about 25 or 26 right now. But we have 1 minute and 15 left on this 5-minute bar, and we might get a nice clean close here out of the bulls. I'd prefer this bar to stay about this size. I don't want to pull out too much. I mean, again, it's a little bit tougher to justify getting long in a soft bull trend the higher you get. In the leg, not in general, but in the leg, right? So 48 seconds out. Let's see if we can get long. I would pretty much risk the curl and then take it bar by bar, which that risk would be very reasonable. But first we have to see a reasonable close out of the bulls. Otherwise, they have not earned our buy. Tough guy, you gotta earn my buy, right? Let's see. Oh, bulls, come on now. I'm going to give this about 30 seconds. what I'm looking for here is a little bit of a pullback into the previous bull bar's body. It closed pretty much at the midpoint, which I don't love, but it did close above that previous wick. Limit order out, no fill. Give it a couple more seconds, see if it can give me a fill. There we go, we got a fill. I will suck the risk up. 251. And then I'll widen this guy out and just take this bar by bar, see what we can get. Again, probability on this is okay. The risk is relatively tight. ATR is very, very tight. So, let's see. Again, stops at 651. The risk on this is not a lot. Dollar amount risk on this is pretty damn small, 2,600 bucks. But the reward to risk potential here is pretty good. This trade I would expect, unless it dips and stops us out relatively quickly, I would expect this trade to take its time. So let's see. Let's just see if we can get some nice continuation here out of the bulls. It's reasonable for me. ATR on the 5-minute chart is below 25 now. It's at about 24. Not Dominic, we do. That's Ninja right there. Again, the profit take, I'm just giving it room in case we get random news or something. Because I'm quick enough to execute where I don't need the limit order sitting exactly where I want it. As far as, you know, where you're going to take profit, I would not lean into negative reward to risk here. If I can help it, I'm just managing bar by bar with the protective stop down at 51. Again, this is one of those dynamic risk scenarios. For example, yesterday's early morning trade, that nice A setup, risk on that trade was about 8,000. Risk on this trade is 2,600. Because ATR is tight. The edge is likely a little smaller. I can't really justify widening out the risk any more than this. At least for the way that this trade has developed. So we'll leave it. See if it can do anything for us. Yikes, we got crypto spammers in the chat. I think that's the first time, man. Probably a good sign, huh? Yeah, young man, the old Discord scammers, they're still at it. And it's like everybody. They just pick someone, pretend to be them, and then target the whole Discord. It's crazy. Discord as a company really needs to get on top of that, because there's literally, I have spent too much time trying to figure out how to fix that, and there's nothing I can do. A 24 on the 5-minute ATR? That's tight. That is tight. Now, you know, normally I'm not huge on risk that's this tight. It's really not all that tight considering the ATR. The average true range is now below. Goodness, is that right? On a 5-minute chart, ATR is now below 23. That was that 22? No, it's at about 23. I'm not big on risk that's so tight that it just chops you out. But if we break this low of this kind of curl with the attempted break, for this trade, which again is, I would call more like a, arguably a B setup. So dynamic risk, right? We're risking a lot less than we might. So risk on this trade is $2,600. If it breaks below here, the entire idea has changed. So I would just cut it, move on. But for now, let's see if these bulls can actually kind of expand things a little bit. Any move right now would be nice. Well, I mean, I'd show you the open P&L, but we're so close to break even, it's really nothing to look at here. This is the open P&L currently. We're pretty much a couple points in the red on the trade. Again, risk on this trade is $2,600. Pretty small. Volatility is so low. All right, we've got 1:05 left on this 5-minute bar. I'm curious how this bar closes. Again, really, I mean, this idea to me dies if we break that low, which is exactly my stop. 650 itself is a tier 4 level, so I don't care that it's right ahead of there. It's just not relevant enough to risk the extra 2 points. Hoping that that would save me. You know, really what's more important here is that low curl that I'm right underneath for the stop. Collective, what's up, brother? How you doing? Hey, Jim, send it to wrench at wrenchcapital.com. This is the first trade for me on the day. Today has been just a very, very low volatility day. It's, you know, in hindsight, it's like, just buy the open and wait. But I can't trade that way, man. Gotta wait for something to present itself. And you know, again, in hindsight, it looks like there's been a lot of setups, but pretty much every one, until the one I finally was able to put on, there was something really wrong with it. In the moment, of course, in hindsight, it's like, well, you could have just bought basically any bull bar and waited. Do you look for orb, or is it not in your strat list? I look at the range, but more so I'm watching it for if I get like a continuation setup, for example, which this isn't really the market for. Continuation, at least not lately. I'll look to see if I can hunt any stops around the opening range. Well, there we go, a little bit in the money now. Again, just manage your bar by bar. Yeah, Christian, that little 7-point jump we just saw was about the most action we've had all day. So you may be disappointed. It is slow today, but we were able to put a trade on. Let's just see how we can manage it. Yeah, this is nuts, because this average range is at about 23, 22. And this is a 5-minute chart. Just so you guys know, on a 2-minute chart, I like to see ATR above 25. And obviously it's going to be larger on a 5-minute chart because it gives the bars more time to put in a bigger range. And on the 5-minute today, it's at 22. That's low. That's pretty crazy. Which platform do you use? This is NinjaTrader. Really, I'd like to get maybe at least, kind of at a minimum, 25 or 30 points here on this trade. But I'll just leave everything wide for now. Because, you know, when you get really tight ranges like this, it's not unlikely that at some point you get a big volatility influx. And if we get that, I like to leave it as open to the upside as possible. Because even if it doesn't hit, I can be pretty quick to just manage. Christian says, Nico, you ever get itchy and size down for like B and C tier setups? I do size down for like B setups, especially just dynamic risk. It's not because we're getting itchy. It's just because I think that's If the trade is there and it offers you edge, even if it offers you less edge, I still think you should take it, just with smaller size. Or smaller risk in general, we'll say. Have I tried the 3-minute chart? I haven't tried the 3-minute chart a lot, at least. Listen, guys, there's no magic to any time frame chart. It's just a matter of, hey, what offers you a good balance of quality of setups with quantity of setups. The higher you go in time frame, usually the quality of setup might increase. Your average trade duration will also increase. So if you find you're getting chopped out a lot and it's actually you getting chopped out, you're not just wrong. If you're actually getting chopped out because your stops are so tight because you're trading like the 15-second chart, widen out to the 2-minute. If you're on the 2-minute, you're like, dude, I just keep getting chopped. Go to the 5-minute. Maybe go to the 15-minute. That being said, the 5-minute is very heavily used, so there's a little bit of differences between that and something that's not really used all that much, like the 3-minute. But you can use whatever time frame chart works best for your balance. Something else you have to consider when choosing a time frame or choosing a couple of time frames to go back and forth with, like me for futures, I'm using the 5-minute and the 2-minute, is how many bars you're going to be looking at every day. You know, you're trading a 1-minute chart. That's a lot of bars. You're really locked in all day. That's pretty exhausting. The 5-minute's a little bit more relaxed. You can trade all day a little easier. So it also depends how long are you going to be trading every day. Pretty much break even here right now on this trade. All right, collective. We'll see you tomorrow, hopefully. Let's see if this ends up being the curl. Again, if it stops us, that's new information, and I'm cool with that. Right now, man, it's like anything to get this volatility up. ATR on the 5 minutes at 22. So here's the test of that little previous bottom. At least coming into it. Young man says I'm yawning, starting to zone out. Think I'm gonna call it a day. All right, young man, we'll see you, brother. Yeah, this volatility's tight, man. As for me, I'm just gonna see how this trade works out. We'll grab some lunch, then I'll come back for the afternoon. Hopefully by that time, volatility will have picked up a little bit. ATR right now on the 5 minutes at 22. That's like a 2-minute ATR. And that's on the 5 minute. That's tight. Joseph says, you ever eat lunch while watching? Yeah, if the market's really, really clean, or we're in like a trend market, I will. I honestly prefer to eat away from the screen and just sit. Again, even trading the 5 minute, when you're trying to make good decisions on every bar, watching 80 plus bars a day, it's nice to take maybe some of those bars off. Decision fatigue is really a real thing. I think it's very underestimated in trading. If you're trading like a 1 minute chart on futures and you're trading all day, your decision making is going to get worse throughout the day. Well, here's some action, huh? Maybe 2.5 points? Come on, Bulls. Take out that little flat top. Give us something. Nah, Ryan, there's really not a strategy change. It's an adjustment to market environments. So I understand why people might think that, well, you've changed the way you trade. Well, the market's changed, so you have to change the way you trade. At least I think you do. A little bit, at least. ripples. See if we can get a test of that little flat top. Well, I mean, again, I'd show you the open P&L, but it's not, there's really nothing to look at here. We're pretty much like break even on the trade, have been for a long time. But that's where we sit. Again, risk on the trade is $2,600. Looking to make probably at least 3,000 on this trade. But managing bar by bar. Okay, not bad. We'll start bringing this in a little bit. Set it at 40 points. Again, looking to get at least probably 30. But I can't say for sure because I have to manage it bar by bar. Well, again, looking for about 30, ideally about 30 points here. We're like 8 points in the money. That's the P&L currently, open P&L. 5 points in the money. Well, this is probably about as good a time as any. If you want daily payouts, Take Profit Trader is 30% off with no activation fee. It really is a great deal if you use code BIG, B-I-G. If you don't use the code, the activation fee is well over $100. And they just wipe that if you use the code, which is very, very nice. So by the time you pass the test, there's nothing else you need to pay at Take Profit if you use that code. One sec, real quick. All right, we are back. Again, let's just see if we can get a pop-up through 21.7. I expect, I mean, this trade's going to take its time, most likely. Unless we see some influx of volatility. Ooh, this is a good question. How would you handle it, for example, if Trump were to speak right now? Well, I would have had that in mind before I entered the trade. But if I was in this trade right now, and Trump made some big announcement, he's like, I'm going to come out and speak in 15 minutes. I'd see if the market reacts to that announcement, and then I'd give it maybe 12 minutes, and if I'm still not out, I'd try to manage it as best as I can heading into him coming out, and then make a note in my data. I'd say managed early due to unscheduled Trump speech. When that kind of stuff happens, which it shouldn't happen that often because most of the time these things are scheduled, but if that kind of thing happens, you just got to make a note, do the best you can as far as managing, and move on. I would not hold it through him talking if he came out unscheduled, because that, who knows what it's even about. That blue line, that all that is the 20 exponential moving average here on this 5-minute chart. That's it. That's it. It's just there for context, psychology. I don't use it for much other than that. Major Gaines, appreciate you, brother. Good to see you. Joseph, ever just say F it, I'm green. The trade is too long. I'm hungry. I'm out. I really try not to. You know, Joseph, when that's the case, honestly, I just put my orders in place and I go and I pop back in every, I don't know, 5 or 10 minutes just to make sure that something crazy didn't happen. Like I got skipped on my fills or something. But whenever I can help it, which is pretty much always, I try not to manage early for something like that. Now, if some, God forbid, some emergency or something happened, I would just close it and go. Make a note later. But for something like, I'm just hungry, I want to go get lunch, put my orders in place, keep an eye on it, eat lunch. But try not to close it early unless there's something that requires me to do so. Like Trump coming out to talk, unscheduled. DJP, what's up? How we doing? Kings, Nico, does the take profit eval reset after each 30 days and reoccurring charge? Or does it continue current P&L? When does it make sense to reset? Well, Kings, well, to be honest with you, I've never taken longer than a month on a take profit test. But I'm pretty damn sure the P&L just stays on the rollover of the month. If anyone's taken longer than a month on a take profit test, I assume you just pay the month rollover and the P&L stays the same, correct? I believe that to be true. Yeah, Chris, the P&L doesn't reset, but the monthly charge is recurring. Yeah. Yeah, listen, that pretty much goes, here's the thing. For evals and test accounts, if you're like day 2 trading, what you really should do is buy an Apex eval, like a 50K, for $16.70 when it's 90% off. Right now it's 71% off, which is still a pretty damn good deal. And just let it hit as a monthly recurring charge. It's no big deal. You're learning way more than whatever that monthly recurring charge is if you got it for a good deal. And use that one eval account to find your edge, gather your data. That is so cheap to gather all that stuff if you just suck it up, trade small, trade 1 micro, gather your data in the eval. And then eventually once you're like, okay, I'm pretty certain that I have an edge here, then you can start to maybe scale horizontally, get those passed, get in funded accounts. But if you're somebody who's like, okay, I have an edge, I've taken payouts, or it's time to hit some payouts, I don't think it really makes sense to spend more than a month in an eval. Opportunity cost is a thing, and I try to pass them basically as quick as I can within reason. Mark says, I don't understand the end of day drawdown. Does this mean you can do whatever you want intraday, like minus 10K? No, valid question, Mark. No, it acts like a normal drawdown. It just doesn't trail in real time. It trails at the end of the day. So, for example, intraday, if you go up 100 points and it pulls back and you end up only 20 points in the money, it doesn't trail it in real time, which is a huge advantage for trying to pass evals. But no, if you hit the backstop intraday, it still fails you like right away. Well, again, we're only about 10 points in the money, 11 points in the money or so. That's the current open P&L. Ooh, Dusty, good question. On Apex, do you prefer rhythmic, trade evade, or wealth plans? Is it what? Did they change the name? I thought it was wealth charts. Leaning toward the trade evade, but debating back and forth. Dusty, I go rhythmic with Apex, just because I use trade evade for take profit, and I like the mix. So on Apex, I go all rhythmic. But again, that's assuming you're using Ninja Trader, which I am. And I guess it assumes that you're using 2 different props. All right, well, we're finally getting a move upside here. Again, kind of my minimum on this trade is about 30 points, so it's getting to be that time. Let's kind of get ready to place our order just in case. All right, I'll place it in case we get a pop through 21.7. Tier 3 level, not really looking at 21.7 on its own. But it might be enough for a few points pop. If anyone has stops above 21.7, I wouldn't say it's a stop hunting zone, but reasonable expectation. You might get a little bit of a push through. All right, test a 21.7. I'd say a weak push through, but it really isn't compared to the recent volatility. Well, Bulls, hit us out. There we go. Well, it's about time, huh? Okay, so risk 2,600 on that trade. And this is where we now sit on the day so far. 1 trade in only today. We're up about 3,000 bucks. So, good. We were able to pull something out. All right, guys, it's time for me to hit lunch. I will probably come back and trade the afternoon. We'll see if volatility picks up. It looks like it might be picking up here a little bit, which is good to see. But that's where we currently stand. And there's the funded roster if curious. All right. Apex right now is 71% off if you use code BIG. I know that's like, oh, but they go 80%. 71 is nothing. But activation fees lifetime are $100 across the board, which is heavily discounted. Okay, but take Profit Trader if you're more into the daily payout structure. It's a great mix. 30% off, no activation fee, which is a hell of a deal. With code BIG, B-I-G. Best deal always at both props. All right, guys. Appreciate you hanging out through the slow volatility. We were able to pull out something. Appreciate you hanging out again. I will see you tomorrow morning, 8:15 a.m. Central Time. Have a good day. Let it come to you. If you're going to trade the afternoon, be patient. Hopefully volatility picks up. Have a good